So I'm Shafiq Chulan, your MC. It is a pleasure to be here once again, and I hope that you are ready as we are starting the event right now with the first speaker of today. So we shall start with the plenary session, and the speaker for this session is none other than Mr. Mohamed Rozani Osman. So he is the Senior Financial Sector Specialist with the Finance, Competitiveness and Innovation Global Practice of the World Bank in Kuala Lumpur, an assignment he started in June 2016. He is currently working on several areas including sustainable finance, Islamic finance, disaster risk finance, capital markets, financial sector development and financial stability monitoring in the East Asia Pacific region. He has 18 years of investment management experience, including 10 years as head of treasury and liquidity management at Khazanah Nasional Berhad, the sovereign investment fund of Malaysia. And he has also managed a leveraged multi-asset portfolio focused on the US technology and financial sectors. So, ladies and gentlemen, this is the time right here, right now. Please join me to welcome Mr. Mohamed Rozani Osman to present the topic, Initiatives by Financial and Capital Markets on Sustainable Development. Mr. Rozani, the stage is yours.
Thank you very much. Good morning to everyone, or good evening, regardless of where you are. Today, I would like to talk a little bit about some of the financial and capital market initiatives on sustainable development and how that might be useful for all our participants today. So, let's start. Why would you want to go sustainable? Now, there are a lot of benefits for issuers or borrowers of sustainable finance, and a lot of benefits for the investors in this thing. For the issuers, one of the key benefits would be to diversify your investor base. It also sends a very strong message about the mission and values of your organization to your stakeholders. This could be very important for some who have public listed entities, for example. Shareholders might be very interested in promoting ESG type businesses. It also has a very positive reputational impact on your organization, and there is potential cost reduction and increased operating profits through efficiency gains, which I will explain further. For investors, for example, they also have client needs because some of these people might be fund managers, ESG fund managers, and so they are required to meet ESG mandates. Investors also avoid reputational risk when they invest in sustainable investments. They face a reduced climate risk, and they also could balance their risk-adjusted financial returns with various sustainability benefits. Now, before I go on, I'd like to explain some of the terminology that I'll be using. These definitions are common in the sustainable finance market, but I have to say that some of these terminology are used very interchangeably by various participants in the financial market. So first, green. Green generally refers to a positive environmental outcome, which means something that is good for the environment. And then there's social, which is a positive social outcome or something that has social benefits. For example, something that benefits a disadvantaged group in society. Then there is sustainability, which groups environmental and social outcomes together. So it requires to have a positive environmental and social outcome together in one instrument. Then there is blue. Blue is something that's related to marine and ocean-based projects with a positive environmental outcome. Now, again, you could argue that blue is a subset of green, but people tend to use blue when they refer to marine and ocean-based projects exclusively. Then there is the SDG, which is basically something that's aligned with some or all of the UN Sustainable Development Goals. Then we also talk about sustainable and responsible investment, or SRI, which brings in elements of green, social, sustainability, or SDG, or any combination of that. And then you have the term sustainable, which I would like to differentiate from sustainability, because sustainable tends to be used as a catch-all phrase when referring to any combination of the terms that I mentioned earlier: green, social, sustainability, blue, SDG, or SRI. You can use sustainable as a catch-all phrase to refer to that grouping. And then there is something called a taxonomy. Taxonomy is basically a scheme of classification of what is eligible. So basically, it could be a green taxonomy, which would refer to a list of what green projects are eligible. It could be a social taxonomy, a sustainable taxonomy, an SRI taxonomy, etc. So some examples out there are the EU taxonomy, And in China, there is the China Green Bond Endorsed Project Catalog. In Malaysia, for example, there's a principle-based taxonomy known as the Malaysian Climate Change and Principle-Based Taxonomy that was issued by Bank Negara. Now, the sustainable bond market, I'll talk about the capital markets first, has been growing very rapidly in the last few years, especially since 2016 to 2017. You'll see a very rapid growth in the issuance of what we call green bonds, social bonds, sustainable bonds, various types of bonds. You'll notice that in the last few years, especially from 2020 onwards, there's been a dramatic rise in the issuance of social bonds. And this is basically due to the pandemic response, as governments around the world issue governments and other entities issue social bonds to meet their needs for COVID-19 response. And you've also seen a rise of sustainability-linked bonds that are growing in popularity. I will explain further why that's the case. And by the way, the 2021 numbers is just for the first half of 2021. So if it continues on pace, it'll be a dramatic increase over that of 2020. Already we are at around the $500 billion US level after just 6 months of 2021. And in all of 2020, there was just under $700 billion US of total issuance. Now let's talk a little bit about sovereign sustainable bond issuance. Now, sovereign sustainable bond issuance has grown very rapidly. This includes issuance of green, blue, social, or sustainability bonds by various governments. Now, one of the reasons why this has been very popular is that governments have realized that they need to meet this kind of expenditure needs, and to do so in a sustainable manner to help them meet their net zero commitments. Now, Climate Bonds Initiative, for example, seed $500 billion in 2021 alone. That's just green bonds alone. That's not including social or sustainability bonds or other forms of bonds. In terms of social bonds, it's also the fastest growing segment because of the pandemic response. And you've seen a couple of issuances out of Guatemala and Ecuador, for example. And you can also see that the issuances between developed markets and emerging markets are both, there's a lot of issuances in both sides. Malaysia, for example, has issued a sustainability sukuk in earlier of 2021, which was 6.4 times oversubscribed. And you can see that this reflects a very strong demand for sustainable issuance. Colombia issued one, it was 4.6 times oversubscribed. This was a domestic bond. Spain issued, and it was 12 times oversubscribed. The UK issued recently, and it was 10 times oversubscribed. So you see the demand is very strong, and that is coming for not just developed markets, but also emerging markets as well. Now, sovereign sustainable bonds are actually catalysts. And so when a sovereign issues a sustainable bond, it sends a signal to the domestic markets on the intentions of the government and of future policy directions towards net zero to meet the government's commitments on net zero. It's also a catalyst that sparks a shift towards sustainability within the domestic private sector. And because it serves as a benchmark, so we notice that there is a noticeable increase in awareness level and interest in various countries after a sovereign sustainable bond issuance. So before that, there might not be much interest, but after a sovereign issuance, there's a lot more interest in that. And within the ASEAN region, we have Indonesia, Thailand, and Malaysia that have issued sovereign sustainable bonds, while Vietnam and Singapore have also announced their intention to issue. So what are sustainable bonds? There are two types of sustainable bonds. One, which what I would call a thematic or use or proceed bonds, where it's any type of bond or sukuk instrument. By the way, I'll be using the term sukuk and bond interchangeably within this presentation. So these type of use of proceeds bonds are where the proceeds of this issuance are exclusively applied to finance or refinance, in part or in full, new or existing eligible projects. So you see, it's quite flexible in that. And what are eligible projects? So they could be green projects, which means, as I explained earlier, something which is a positive environment, something that's positive for the environment. So that's a green bond. Something that's positive for a social group. So that's a social bond. Or something that has a combination of green and social. So that's a sustainability bond. Or it could be focused on marine or ocean-based projects. So that will be a blue bond. Other variants include SDG or SRI bonds, and they have a different use of proceeds, but then again, they're all linked to to their origin. So SDG bonds will be linked to the UN SDGs. SRI bonds would meet the different SRI criteria. So to issue one of these bonds and to get one of those labels, an issuer has to comply with 3 requirements. You need to assign the issuance proceeds exclusively to meet the financing needs of those projects. You have to declare the issuance to be green, social, sustainability, or blue before the issuance is done. And you need to commit to a level of transparency and reporting on the issuance use of proceeds. And there is often, you will see something like a 4th requirement that's not strictly mandatory, but is highly recommended and almost everyone does it. And that is to obtain a third-party verification or second opinion review. It's kind of like a credit rating assessment, but it's not really a credit rating. It's more of a assessment of your framework, your green framework or your social framework or your sustainable framework, so that investors can read through and understand what it is that you're doing, and they see an impartial third-party review of your framework. Now, the second type of bonds are sustainability-linked bonds. Now, this is something that's gotten really popular in the last few years, and a little bit different from what you've seen, what you may have seen in Malaysia, for example. So these are any type of bonds where the financial or structural characteristics of the bonds will vary. And it depends on whether the issuer achieves certain predefined sustainability or ESG objectives. So generally, these are measured through KPIs, key performance indicators, and they are assessed against sustainability performance targets. So you will have a KPI where that's an indicator that you can measure, and you will have a target that you need to meet. And how that works is that if you meet those targets, the return, the yield or the coupon or something to do with some financial characteristic of the bond will change depending on your performance. Now, why is these kind of bonds are really popular is that they don't have any restrictions on how the proceeds can be used. So it could be used for various types of projects, no restrictions, but the issuer needs to meet objectives, certain objectives, in order to gain the full benefit of issuing these bonds. To apply the sustainability linked label, you must comply with 5 requirements. You have to select your KPIs, you have to calibrate your sustainability performance targets, and you have to set up the bond characteristics, whether it's a structural characteristic or financial characteristics, and how it varies depending on whether you meet those KPIs or not. Sorry, whether your KPIs meet your targets or not. You have to do regular reporting, and you need to do a post-issuance verification by an independent external party. There is often a 6th requirement, and it's similar to the usage of proceeds bond, where a third-party verification or second opinion review is highly recommended because investors are expecting that. Now, what are the standards that govern these kind of issuances? There are various kinds of standards on a global, regional, and national level. At the global level, you have the International Capital Markets Association. They've come up with the green bond principles, the social bond principles, the sustainability bond guidelines, as well as the sustainability linked bond principles. And these were issued starting in the last few years, and they've been updated rather regularly. So these are the latest guidelines and principles that they have issued. And I think they do update them every 1 or 2 years. On the regional side, you have in Europe, you have the European Green Bond Standards that's under development. They've in July of this year, they issued a proposed regulation on a voluntary EU Green Bond Standard. In the ASEAN side, it was launched in 2017, the ASEAN Capital Markets Forum, which brings together all 10 capital markets regulators in the 10 ASEAN countries. And they've issued the ASEAN Green Bond Standards, Social Bond Standards, and Sustainability Bond Standards. And these are something that's applicable to issuances that have an economic or geographic link to the ASEAN region. On a national level, these are examples of some of those. In Brazil, for example, the Federation of Banks and the Business Council issued guidelines for issuing green bonds in Brazil. In Malaysia, the Securities Commission, as the capital markets regulator, issued a Sustainable and Responsible Investment Sukuk framework. And most issuances in Malaysia would follow the Sukuk framework. If you issued a green bond in Malaysia, however, they tend to follow the ASEAN Green Bond Standards. Now, what is an external review or second opinion that I have mentioned earlier? Now, this is mostly voluntary, In some jurisdictions, it is actually mandatory. And it's highly recommended as almost everyone does it. And it's something that's sort of expected by investors. You've seen it called a second opinion review, or second party opinion. There are various ways you can call it. It's basically a report by an independent expert that will assess the green bond issuance with regards to its alignment to applicable green standards or social standards or sustainability standards for that matter. In this case, most of the examples here are a combination of green bonds and sustainability bonds. External reviews some of them are non-profit entities and other are for-profit organizations. You'll see familiar names out there. Some of the largest ones in the world, for example, Sustainalytics, Cicero, KPMG, Moody's, S&P, and in Malaysia you see RAM and Mark. There's also for an issuer, you can choose between you want to go for a domestic reviewer or international reviewer. And it really depends on the kind of investors that you're trying to get, as well as the type of issuance that you're doing. For example, if you're doing a domestic issuance, usually you go with a domestic reviewer. As a domestic reviewer tends to know the local regulatory, business, and environmental situation a lot better. Whereas an international reviewer might have a very good reputation internationally, but they may be less familiar with the local situation. So it really depends on your needs. When it comes to frameworks, now, what those people are reviewing are actually reviewing your frameworks, and this is the framework that guides your issuance, that outlines what you can use those proceeds for, or how you want to meet your targets. So you've got on the left side, I have some examples of some sovereign bond frameworks. You've got the Malaysia SDG Sukuk framework, and you have the Indonesia Green Bond and Green Sukuk framework, together with their second party opinions. On the right side, you have some corporate issuers. You have PNB Merdeka Ventures in Malaysia. You got Majid Al Futtaim in the UAE, and you got SME Bank, which might be relevant for you today. Now, impact reporting. This is something that you do at the end of your issuance. I mean, once you have issued, you need to do some impact reporting, and usually it comes about a year after your issuance date. And what is an impact report? Basically, an impact report is something that you report on a number of indicators for the projects that you did in your issuance. So, for example, if you did a green bond, you need to report on how you use those proceeds and what was it used for, how much did you spend, how much is left that's unspent, are there any impact on the environment that as a result of your issuance? For example, was there any amount of emissions reduction, or emissions avoided, or some kind of environmental benefit that came out? Now, a lot of people think it's very difficult, but it actually may not be that difficult, because there's a lot of examples out there, both issued by the UN and other agencies, on how to measure your impact. And what it does is it's something that you provide to your investors, and it's not really, aside from the usage of proceeds, it's not really a financial report. So some people, what they do, some issuers, what they do is they embed this into their annual report. Others do a standalone report, which they send to their investors. There is a list here. I believe that if you can have access to this presentation slide after this presentation, you'll be able to click on any of the links that I have provided in this presentation, and you can have a look at those reports directly. And you can see that they are issued by governments, corporates, even the World Bank itself. Our own organization issues our own impact reports on our sustainable development bonds. Islamic Development Bank as well has it included in their annual impact report, for example. And corporates, some of them have a very specific impact report, others do it annually. Now you see Apple and Alphabet there, so you see that the largest corporates in the world also do also into the sustainable bond market. A little bit of a case study on what a green bond may look like, or a green sukuk in this case. Those of you in Malaysia will be familiar with the Merdeka 118 Tower that's under construction. Well, it's financed by a 2 billion ringgit green sukuk program. And it's the first green sukuk ever issued by a quasi-sovereign issuer. It meets the ICMA Green Bond principles on a global level. It meets the ASEAN Green Bond standards and also the Malaysian SRI Sukuk guideline. So you see, issuance under this can comply with multiple guidelines and standards. So it's not a requirement that you meet only one. You can actually meet multiple. The first tranche was issued in 2017, and it was also issued with a non-green sukuk program that finances some of the other buildings in the development. So you see that it's not exclusive. Just because you do one issuance to green doesn't mean you can't do a non-green issuance. Let's talk about the SDG sukuk. HSBC Amanah in 2018 issued the first SDG sukuk in the world. So what it does is they support specific projects that contribute to the SDGs. So when you do an SDG sukuk, you need to identify what SDGs that you meet. In this case, it meets 7 different SDGs, and you can also have access to their bond and sukuk report. Sustainability bonds. This is where you have a mix of environmental and social outcomes in that you are financing. So this is done by Alphabet. Alphabet, if some of you may be aware, is the parent company of Google and YouTube. So you may not be familiar with the name because you're more familiar with the brand names, but this is the parent company. And they issued a sustainability bond in 2020, about $5.75 billion to finance 8 different areas. So you see a combination of green, which is energy efficiency, clean energy, clean buildings, clean transportation, and circular economy, as well as social projects, which includes affordable housing, commitment to racial equity, and support for small businesses. It was the largest corporate sustainability bond ever issued at the time it was issued, and it meets the green bond principles and the social bond principles. And you can have a look at their framework and the sustainability, their second party opinion here on the links that I have provided. Blue bonds. This is an example of a sovereign blue bond that was issued by the Republic of Seychelles. It was to finance the expansion of marine protected areas, improve governance of priority fisheries, and development of the national blue economy. It's a small bond of $15 million because the Seychelles doesn't need a lot of money for this particular project. It was the first ever sovereign blue bond. And we had a partial guarantee from the World Bank and was supported by the Global Environment Facility. It's very important to show this because a lot of countries, especially those with long coastlines or island countries, for example, they have a need to finance sustainable use of their marine resources. So this is an option for them. And there's a link to a case study here that I have provided. Now, remember at the beginning, I mentioned sustainability linked bond. So this is an example of one that was issued in 2019. It's issued by NL, it's a power producer, power plant, and it was a 1.5 billion issuance, $1.5 billion issuance in the US market. It was oversubscribed almost 3 times, and 70% of their investors had an ESG aligned strategy. They believe that this issuance was 10 basis points cheaper than an equivalent conventional bond. Well, that's from their own opinion. We don't have an independent review of that. The proceeds for this issuance could be allocated to any project or for working capital. So there are no restrictions on the usage of proceeds of this issuance. And so in theory, they could be used for non-green expenditures as well. The reason why they can do that is because this is a sustainability linked bond and not a sustainability bond. And what is it linked to is that it's linked to their renewable energy target. They have set themselves a target of meeting 55% of installed energy generation capacity to be renewable energy by 2021, by the end of 2021. And at issuance, their capacity was 45.9%. So they set themselves a target that if they don't meet this target by next month, which is December 2021, the coupon on their bonds will increase by 25 basis points as a penalty. So you see, this is where the link is. They can use the funds for anything that they want to use it for, but they have a target to meet. If they don't meet that target, they have to pay more. So it becomes more expensive for them. So this gives them an incentive to work hard to meet their target so that their coupon will remain the same. Now, this is a case where the coupon increases. You could also have set up a case where the coupon decreases as an incentive. So depending on how you structure the bond, you could have a penalty, you could have an incentive, or you could have both, where if you meet the target, you get incentive, but if you don't meet the target, you get a penalty. So it's really up to you as an issuer what you would like to issue, and this is something that perhaps you structure based on what your investors are looking for. Now, this issuance by NL is aligned with the ICMA Sustainability Linked Bond Principles, and you can have a link to their financing framework as well as their second party opinion here. Now, why are people issuing all these bonds? Well, there's a lot of talk about a greenium or a green premium. So increasingly, you will find very high demand and sometimes premiums against traditional issuances. Just talking about the issuances this year, Malaysia's issuance of a sustainability sukuk was 6.4 times oversubscribed. And according to reports, it was the lowest ever spread against versus the US Treasuries that Malaysian sovereign issuance had ever achieved. So that's very good because it reduces the cost of financing. Germany's issuance of a green bond was 6.5 times oversubscribed and recorded a 2 basis points premium over a German non-green bond. And how we know this for sure was because Germany issued a green bond and a non-green bond simultaneously with identical characteristics. The only difference was one was green and one was not green. So based on that, they found that they managed to issue the green bond with a 2 basis points premium. So it shows that investors prefer the green bond over the non-green bond. In Colombia, their domestic green bond issuance was 4.6 times oversubscribed, and they estimated that they got about 7 basis points premium. Why I say estimated was because they did not issue this simultaneously with a non-green bond, so it's based on analyst estimates of the yield versus the yield of a similar bond issued earlier. Spain's green bond was 12 times oversubscribed, very strong demand there, despite the size of 5 billion euros, which was pretty big. The UK did a 10 billion pound green bond and was 10 times oversubscribed. So demand for that was about 100 billion pounds. So that's a huge demand. And they estimated that they got a 2.5 basis point premium. Now, one caveat that I would like to mention here is that pricing of green bonds, pricing of sukuk and bond issuances are actually driven by issuer credit, investor demand, and market sentiments, and many other factors independent of the issuance's sustainable credentials. So the only way for you to know for sure if there is a greenium is that if you issue two bonds simultaneously, where the only difference is one being sustainable and the other one is not. So then you know for sure. In all other cases, it's usually an estimate based on the yield curve that's out there, and then you can compare that, and that's just an analyst estimate. Now, we've talked a lot about bonds, so let's talk about the other side, sustainable loans. There are two types of sustainable loans that we can see, and again, they are very similar in concept with the capital markets, which is why I spent a lot more time in the capital markets to explain what they are, because they're quite similar. There's a use of proceeds loans where the loans are automatically, where the loans are exclusively applied to finance eligible projects. So it's very similar to that of the use of proceed bonds earlier. So you've got the green loan principles, which define a green loan, where you utilize it for green projects, and it includes related expenditures such as R&D. And then you have social loans, where you use it for social projects. The definition of social and green are very similar between the loans and the bond side. There's also the sustainability linked loan principles, where similar to the sustainability linked bonds, you'll find that it incentivizes the borrower's achievement of certain targets, sustainability targets. So again, you have your KPIs and you have your performance targets. And same, just like the bonds, you don't have any restrictions on how you can use the proceeds of this loan. And so you find that this is very attractive to what we call hard to abate borrowers in transportation, chemicals, and heavy industries. So some borrowers include oil companies such as Royal Dutch Shell. So they borrow these loans even though the use of proceeds may not be sustainable in that sense, but they are committing their organization to meet sustainable targets. And if they don't meet those targets, they will have to pay to face penalties in terms of the financial structure or some form of structure in their loans. One reason why you don't see a lot of information about these loans is that, as you can expect, loans tend to be a bilateral arrangement between the borrower and the lender. So a lot of the details will not be public. Whereas for bond market, because they go out to the capital market, a lot of the information there is already public. Sustainability linked loans are very popular, especially in the last, I would say, since they first appeared in 2017 or so. You'll see they've outstripped the issuance of green loans. And one of the reasons you can probably expect is because they don't have a usage of proceeds restriction, so you can use it for a lot of things. However, you do need to meet your performance targets. So early transactions use overall ESG ratings of the firm, of the borrower as their sole KPI, but more recent transactions are becoming more detailed. So they not only use your overall ESG scores, but they also have more specific KPIs that the borrower has to meet in order to gain the incentives that are structured into the loan. As an example, I will show here a sustainability linked loan. This is Accor Hotels. I think there are a couple of those hotels around the world you may be familiar with. It's a 1.2 billion euro 5-year multi-currency loan. Multi-currency revolving credit facility for general corporate purposes. So you see, you can use it for many things. So there's no restriction on usage. So the terms of the loan include a correlation between financing costs and overall ESG performance. There are additional margin adjustment parameter linked to the ESG score. And the interesting thing that you might be looking at is how the interest on the loan is calculated. You have there's a formula. There is a there's a reference currency index, which is because it's a multi-currency loan. So you have that, and you have a credit-based margin based on the credit risk of the borrower, which is Accor Hotels. Now, these two parts are normal for any loan. And then you have something that's unique for a sustainability linked loan, and that's a premium or discount based on the ESG rating. So this loan, the borrower has credit ratings by S&P and Fitch, that's normal. And then something different is that he has an ESG rating by Sustainalytics. And this ESG rating will determine the interest that they pay. So if the issuer's ESG rating drops, they will probably have to pay more, a higher interest. If their ESG rating improves, they probably get to pay less. So that's an incentive and a penalty together in one structure. So there's a link to a case study here by BNP Paribas. And so I encourage all of you to have a look at this, because this could be something of interest, and it's something that we haven't really seen much of in Malaysia just yet, and in the region as well, but it's getting very, very popular, especially in the United States. Now, who are all the people who are investing in this? So investors are increasingly including sustainable investments. So you've got a very specialist group of ESG, SRI, and sustainable investors. And usually most of these investors are the same as those for other non-sustainable investments. You've got your pension funds, your asset managers, insurance funds, sovereign wealth funds, corporates, and banks. Now, all of them they've always been investing out there. They've invested in non-sustainable investments before, but now they're increasingly making sustainable investments. Some of them have allocated chunks of their portfolio towards sustainability or ESG, as they may call it. Some of them have targets where they have X% today and maybe X plus Y% tomorrow. And some of them have set themselves a target to be 100% ESG compliant by a certain date. So you see the amount of investments that are going into sustainability is increasing over time. And the amount of money that's available for non-sustainable investments will be decreasing over time. Well, maybe not the absolute amount, but in terms of percentage, will be decreasing over time as more and more investors move towards sustainable investments. And why they're doing this is because, one, they have a positive reputational boost. They also have a very strong demand for this from their stakeholders, could be from their shareholders, could be from their investors. And also because in some cases, and in many cases, they see higher returns from ESG investments. I believe MSCI has done a study on this. You might be able to check on where they see how ESG investments have actually made higher returns. And about a year ago or 2 years ago, Malaysia's own pension fund EPF mentioned that some of their ESG investments have actually performed better than their non-ESG investments. And this is a chart showing the growth of responsible investors and the amount of assets under management of responsible investors by the UNPRI. So the numbers of signatories have gone up very rapidly, as well as the assets under management. And you can see they're growing at an increasing trend. Now, you might ask, where does Islamic finance fit into all of this? Well, Islamic finance and sustainability actually started before the first Green Sukuk was ever issued. In 2014, the International Finance Facility for Immunization issued $500 million vaccine sukuk to finance child immunization. and strengthen health systems in some of the poorest countries in the world. This was managed by the World Bank. So you can see issuing sukuk or issuing bonds to finance vaccines is nothing new. It's not, it did not start with the COVID-19 pandemic. It started 7 years ago when we did the issuance to finance child immunization. In 2015, Khazanah Nasional in Malaysia issued a 100 million ringgit SRI sukuk. This is basically, if you look at it, as a structure, it's basically a combination of a use of proceeds sukuk and a sustainability linked sukuk, because the use of proceeds was spelled out. It was to finance some schools, and it was also a sustainability linked sukuk because the return of that, the redemption yield at maturity is linked to the to whether the project met its KPI targets. So if it met its KPI targets, there was a difference in the financial payout. So it's basically a combination of those two types of sukuk. So both are examples of a social sukuk, and they were both issued before the social bond principles were launched. And so people have been investing in sustainability for a long, long time, not just in the last 2 or 3 years. Now, before I end my presentation, I would like to explain that there are a bunch of links out here that I have provided here, the various reports that we have done, publications. We have done a report on how to develop a national green taxonomy. We have a report on the first 3 years of the green sukuk. We have guidelines and guidance for sovereign green bond issuance, as well as guides on green bond proceeds management and reporting. This is basically an impact report. As well as other links to other sources that we have that might be of use for you. So thank you very much. That ends my presentation. I'd like to be able to take questions now. I'll just look it up for questions, if there are any.
All right, thank you, Mr. Rozani. Of course, we do have questions from the attendees here today, and we have exciting ones, in fact. So, starting off the questionnaires that we have right here, the first one says here, could you please elaborate on the impact of COVID-19 pandemic on the sustainability of capital market in Malaysia? That'll be the first question for this session.
Okay, I presume if you are talking about the impact of the COVID-19 pandemic on how the capital market has reacted, or the impact on the general financial market in Malaysia. So, as you can see, there is some impact. You aware of Malaysia's own sovereign sustainability sukuk that was issued earlier this year, and part of that will go to a various general kind of expenditure. But as you can see, the government is naturally spending a lot of money on the COVID-19 response. So there will be some impact, and I'm sure some of that expenditure will go to a strengthening programs by the government that goes to support on the social side, on the disadvantaged people who are affected by COVID-19. So when I talk about this, I'm talking about health expenditures, for example. Naturally, you will have increased health expenditures. So the government will be financing that through various means. So you will see increased expenditure, increased borrowings, both by the government and potentially by other corporates who might be affected by the COVID-19 pandemic. Now, if you look on other respects, there's been some negative news on some Malaysian corporates regarding treatment of some of their employees, for example. Now, that has an impact on the amount of scrutiny that will be given to capital market issuances in Malaysia, especially if you are a corporate that's linked to those entities. So you may need to be more transparent in the way you handle your investors, and you may have to open up to more detailed reporting. So all this does have an impact. It changes the perspective of investors when it looks for Malaysia, but I think it's all in a very positive way, because increased transparency is always better, and you will see more issuances and more for sustainability, because people get more interested in sustainability. I remember in the first few months of the lockdowns, people around the world were reporting the air was cleaner, lower emissions. So then that naturally brings more attention towards green issuances and green loans and green projects in general. So it brings a lot more interest into sustainability.
That'll be a perfect answer. Hope that answers your questions for the attendee that asked. We're going to move on to the Sukuk sustainability. So Sukuk sustainability is a preferred compared to conventional bonds. Is it a trend among investors? What are your comments on that?
Okay, when it comes to, you're talking about sustainability Sukuk or sustainability bond, I think that really depends on the market that you are targeting. If you are issuing in Malaysia, for example, for a long time, even before the sustainable Sukuk came out, investors have preferred, so issuers have preferred to issue Sukuk over conventional bonds simply because they can tap a much larger market, because the issuer of Sukuk, when you issue a Sukuk, you can get Sharia compliant investors as well as non-Sharia compliant investors. But if you issue a bond, you can only get a conventional investor. You can't get a Sharia compliant investor in. The same works for sustainable Sukuk. So that said, you see a lot more interest in that within the OIC countries. You've seen similar Sukuk issuances out of Indonesia, Malaysia, and in the UAE. And I believe there might be interest in issuing in some other countries in the region as well. So naturally, it's preferred in the sense that, excuse me, it's preferred in the sense that it opens up your investor base to a much larger investor base. Now, of course, if you are issuing in the US, for example, you're a US company and you're more of a domestic market, you might not see that need. So it really depends on the market that you are trying to appeal to.
All right, perfect answer. Well, since we're talking about bonds, sorry about this, it's a personal question of mine. What are the difference between green bonds and also sustainability bonds? Is it somewhere similar?
Okay. Now, I'm not sure whether my slides are still on. Oh, my slides are not on. Okay, never mind. If the difference between a green bond and a sustainability bond is very simple. Green bonds only go for green projects. So it has to be green. Everything has to be environmentally friendly. Sustainability bonds are a bond that finances a combination of green and social projects. So it's not just environmental, but it must have a social component as well. So as an example, I believe there's been one in Malaysia called Edra Solar that issued a sustainability Sukuk, and that issuance finances a renewable energy power plant, a solar power plant, and there are some benefits to the local community because there's some, I believe they allow some farming in the land where the benefits accrue to the local community. So, and going back to the Alphabet bond issuance that I mentioned earlier, they finance both environmental projects such as renewable energy, clean energy, and they also finance affordable housing. Funding towards racial equity, for example. So you need to, when you have both combined, you become a sustainability bond. Now, I'm going to differentiate sustainability bond and sustainable bonds. Notice there's very minor difference there. Sustainability bonds is for those who have green and social projects inside. Sustainable bonds refers to the whole universe of those bonds. So sustainable bonds could be green bonds, could be social bonds, could be sustainability bonds, could be blue bonds, SDG bonds, or SRI bonds. So what makes it even more confusing is that when you see in the media, quite often some of these terms, especially sustainability, SDG, and sustainable are used interchangeably, and that causes confusion among readers. So one of the reasons for this is that all these terms just came up in the last few years, and so people are still getting used to the terminology, and so there is some confusion out there.
All right. Okay, now I understand better. So I think we have one last question before we end the session and proceed to the next agenda of today. So the attendee asked, based on your presentation, do you see investor behavior leaning towards more sustainable products compared to conventional products? I mean, we've talked about it earlier as well. So the behavior, the investor behavior, which one is it leaning towards to?
Okay. I think if you talk about developed markets, definitely there's a very strong lean towards sustainable investments because driven both by general awareness in the public of the need to be sustainable out there. And so there's strong push from the investors. So when I say investors, when you talk about pension funds or mutual funds, so people who are saving money to pension funds, saving money to their mutual funds are having that demand that's translating towards their fund managers. So naturally those pension funds, those large institutional investors will be shifting towards sustainable investments. When it comes to emerging markets, it's a little bit further behind because in some countries, sustainability is not high on the public awareness agenda, but in other countries they are.
How about
in
Malaysia? Sorry,
Thailand, in Malaysia, Indonesia, the public is getting more and more aware of this, and so there's a gradual shift towards a preference for ESG type investments or sustainable investments. I believe, for example, in Malaysia has made an announcement that a certain percentage of their assets will be sustainable. EPF have announced an ESG goal by 2030, I believe. I might be off by a couple of years there. You might need to check that. So as you can see, these investors are shifting towards sustainability. So there is a definite shift in that regard. It's just that different investors are going at different speeds.
I see. So is next year going to be a good year for us to invest for sustainable development? Especially.
I think any year is a good year to invest in sustainable development.
Yes, we have a long way
because
to go.
how I would like to tell this to potential issuers is that if you are a business, a company that's doing projects, investments, various businesses, and if you're already doing green projects or social projects or something that you're already doing, why not fund it with these instruments? Because if you go out there and you put yourself out there as a sustainable issuer, you only gain positive reputational impact for yourself, right? And if you are one of the first, you get a first mover advantage. You are one of the first, so you can tell everyone, look, I'm sustainable, my competitors are not. Give me the business, right? If you don't, and you are one of the last few to get on board, then your investors will start asking you, why are you not sustainable when all your competitors are? And so then you'll be left behind. So even if you're looking at it from a pure profit perspective, it makes financial sense to start looking at sustainable finance as a means to finance your business, because it provides you an opportunity to position yourself versus your competitors.
All right. Thank you so much, Mr. Rozani. Unfortunately, we are running out of time, and I really want to listen more from you. Maybe we can sum it up in a very short summary to conclude your session here today, Mr. Rozani.
Sure. So basically, there's a lot of tools out there in sustainable finance. You've got in the bond side and you've got the loan side, right? A lot of these instruments are out there. They're constantly evolving. So whatever you see today, a year from now, you might see additional instruments out there that you can use as you move towards sustainability. We started out with green bonds. Then there came social bonds, then came sustainability bonds, then came sustainability linked bonds. You've got SG bonds, blue bonds, SRI bonds, various type of bonds. I'm sure there'll be more as time goes by. Instruments that you can use to finance your activities in capital markets. On the loan side, you've got green loans, social loans, sustainability linked loans, sustainability loans, sorry, I'm getting them mixed up myself, sustainability loans and sustainability linked loans. So again, even on that side, you see more and more of these instruments evolving over time. And what they are all doing is they're providing borrowers with all kinds of instruments that you can use to meet your sustainable financing needs. So all this is very useful. So please use them. And if you find that they don't exactly meet your needs, talk to your banks, talk to your bankers. Maybe they can structure something that meets your needs, that meets sustainability criteria. Thank you.
All right. Thank you so much, Mr. Rozani, for sharing your experience and your knowledge here for the topic Initiatives by Financial and Capital Markets on Sustainable Development.